VELO has been consolidating within a longer term bearish trend. It's 200-day moving average, this one, which underscores its underlying trend is sloping bearishly lower. So the stock has just been consolidating within that. I think you can even say, one can even say going all the way back to early this year, the spring of this year. The stock's been consolidated, nothing, no strong trend in the stock. The stock's been trending. Well, it can be good for some traders. So as things stand right now, the consolidation is expected to continue as well into early January of 2026. The projections are currently saying, based on this daily chart, we have beginning from the downward projections, some really, really negative downward projections. Obviously, those stocks don't trade in negatives. In other words, they are referring to some really fractional prices. Then from 1.44, which is the next whole figure, and then above that, there's a huge gap. We have 9.17, 11.24, 12.52. Okay. Um, but we have been able to gather the data concerning the stock, and here we have a couple of indications, a couple of a reading of a summary of its some of its indicators. The price pressure momentums, they measure the angle of attacks of the various moving averages. So we are using the 10-day moving average, which the ppm one refers to, and then the 40-day moving average, which this ppm two refers to, and then the 40-day moving average, and then 200-day moving average. This is the 21-day moving average. If I didn't mention, it's the 21. So for the 10-day moving average, the trend value is 0.5785. Anything from 0.25 means that moving average is trending. Okay. So the 10-day moving average is trending. However, its derivatives are severely bearish, all negative. This is it here. This is this one here. You can see here. Let me show you down here. Yeah, you can see here. It's trending. Okay. Derivatives are all severely bearish. Okay. So okay, and it means that that moving average is decelerating. Okay, so for the ppm two, that is referring to the 21 day moving average. It's neutral to weak. Okay, value 0.0 negative 0.0534, so neutral to weak with negative derivatives indicating continued weakness. Okay, so amongst other things as well, this is what this ppm 10, sorry, ppm 1 is also referring to. ppm, it's associated, it measures the angle of attack of the 10-day moving average. So it's also saying that positions opened all the way back to 10 days ago are in profit, 10 trading sessions ago. So 10 trading sessions ago is the 17th of December, of November. So if it's somewhere here, so you can clearly see here, it's if you bought a position here and the price is here, you're surely in profit. So that's what it's also indicating. So yeah, positions opened all the way back, then are in profits. The ones for this ppm two, referring to the 21-day moving average, which is somewhere in here in the mix of all of these things, is slightly, those positions are slightly not in profit. They are not in profit at the moment. They are not in profit at the moment. So yeah, 21 days ago will be going all the way back. So you have to add another 7 days to remove another 7 days from 21. So let's see, that will be the 17th of November, will be what, 10th of November. So you have here 10th of November. You can see that. Yeah, you see the prices, the stock, if you open your position here, you are not in profit because this is where the price is. So that is what it's also trying to indicate amongst other things. So if you go all the way back to 40 days ago, those ones will be in profit. That 40 days ago will be somewhere around here, somewhere below around here. Those ones are in profit. That's what it's also trying to indicate. 200 days ago, you're talking about so many days back, they're not in profit. So yeah, in a nutshell, that is what it's also indicating. So these derivatives are telling us whether the pace at which they are buying and selling, and those sort of things. So as things stand right now, I can exactly say whether they are buying more or they are buying less because it has to be with reference to something. We could do that. We could just quickly have a look at it here. Um, they're changing. Are they improving? These let's see now. Are they improving? No, they are not improving. They are selling more now. As a matter of fact, so the selling is getting worse. They are selling more now. The selling pressure is creeping in on that 10-day moving average. So on its there's also the market grid. Market grid not shown on this chart, not shown here. It gives us a range of prices the stock has the potential to trade within. This SXT VRF SXT is at the bottom of the grid. Okay, so it tells you that if the stock if it gets to such a level, it's either the grid will expand to accommodate it, or um, the stock might pull back to go back into the grid. So it's also saying that when it gets to such a level, it might be an opportunity to buy, but it doesn't always work. It doesn't always work that way. So it has they all have prices as well. There's also a value that's missing here, RXT. RXT is at the top of the grid. When it gets there, it may mean that it might be pulling back. It might be pulling back. That might be if you're already there, you shouldn't be there. You should be aware that a contraction is likely to happen. So as things stand right now, using going by these prices, okay, 4.76, which is at a discount to the current price. The current price is 4.93, so that has a 75% probability of printing going that low. 4.9 has a 65% probability of going further down to meet to print that price. 5.05, 45% probability of reverting towards it. 5.21, 30%, 5.49, 15%, 5.65, 8%. So remember we have a mix of indications based on these moving averages, their price pressure momentums. Only the 40-day moving average is robustly and completely and wholesomely bullish. Yes, wholesomely bullish. Okay. So it's also indicating that there's a bullish divergence. There's a bullish divergence. The rest of the moving averages are all negative or showing some or negative or going negative. So in other words, it's the stock is in transition, and yeah, we are in a transition phase. The probabilities may favor a bounce, but the larger trend remains uncertain until this 200-day moving average gets some stabilization. On its 4-hour chart, let's see what we have. Okay, so on the line trend on this 4-hour chart is bullish. You can see here sloping bullishly upwards. Okay, this will be very good for traders. It's a 4-hour chart is always active, always active. Post market session, pre market session, regular session, always active. So best used for traders. So yeah, the short term trend is bullish. Okay, even though the stock has been contracted some of that expansion. This began on the 19th of November. Okay, so here the extrapolation is saying that yeah, it might hold it. It might hold the strength. Yeah, it might. It's saying here that the contraction may continue all the way down towards midday today, and then after that, it might attempt to resume the uptrend. Okay, no guarantee that will be the case at all. Let's see what we have, and then the 40 period moving average is equally validating that as well. But at the same time, yeah, they might begin to diverge from Tuesday the 9th. Projections here are saying, let's see what we have. Nothing here negative, nothing here negative, but yes, some bearish, some downward projections: 3.94, 4.20, 4.6, and then upper projections of 5.45. Let's see what it has in terms of probability of it printing that 5.45. Let's see what we have. 5.45 will be something around 15%. Yeah, 5.45, something right around 15%. 5.92, 6.22. Let's see. Yeah, okay. So we're looking at much smaller probabilities of it, rate of it retesting 5.92 and 6.22. That will be, they will be surely less than 8%. So have a look and see what you make of VLO, and thank you very much for watching this video.